Welcome back. Today, we're going to take a closer look at my second favorite semiconductor company, AMD, also my second biggest position in my overall portfolio. The company today reported earnings, and unfortunately, the stock is down roughly 4.4%. And before dropping this video, I wanted to listen to AMD's earnings call until they gave us a guidance until their MI300X. Luckily, I didn't have to wait long. So now we're going to drop this video, and I do believe that is the main reason the stock is down right now. For those not familiar, my name's Jose Najarro, and I spent way too much time reading about the semiconductor market. But thanks to that, my master's in electrical engineering, and my experience working at various innovative companies, I have created the #1 semiconductor podcast for investors. So let's get started.
I want to thank the Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for the subscription service. Now, let's continue with today's episode.
So I think the first place to start off is to see how numbers did versus expectations. So AMD's earnings quarter 4 for 2023 had revenue of 6.17 billion. They kind of rounded up to 6.2, but it was 6.17 versus 6.14 expected by analysts. So it was pretty much in line. I would not consider this a beat. Earnings per share were roughly 77 cents, very similar to the 77 cents expected by analysts. Now, for quarter 1, their guidance for the first quarter was about $5.4 billion plus or minus 300 million. So on the top end, they did give us roughly 5.7 billion. And this is where I started to see things go a little bit weak for AMD. We can see analysts based on this, on the average, were expecting around 5.7 billion. So AMD kind of has it on the top end here, but still, for a company, in my opinion, to have been run up almost 25% in the past month or so, they had to really blow expectations. And on January 29th, which was a day ago, I actually posted that, in my opinion, AMD will need to guide much higher on MI300X, at least 4 billion. If not, I believe the probability of the stock taking a hit is very, very likely. And AMD during the earnings call just mentioned that while they are updating their 2024 AI chip revenue guidance, previously it was exceeding 2 billion. Now they expect it to be 3.5 billion. I believe investors were expecting a lot more, at least at $4 billion. To some extent, AMD might be wanting to be a little bit conservative at the moment. On the other scenario, it could be that Nvidia continues to hold the crown here in the AI space. They continue to kind of have this supply chain on lock. And even if AMD is trying to really grow in this market, because it's such a supply chain constraint market right now, they really can't do it, and they can't really increase that guidance. The other thing, like I mentioned, is AMD could just be very, very conservative, and every quarter from here on out, we could see this grow and grow and grow. And like I mentioned on the X post from yesterday, I believe that AMD's PE forward ratio was a little bit on the heavier side. And you might be wondering, Jose, how are you so bearish on a company that's your #2 position? I don't believe I'm bearish. I believe because it is my #2 position, I want to be more aggressive, more disciplined to some extent, right? If you have, let's say, a child to some extent, right, you're going to have to be strong with them, especially if you want them to succeed really well. And that's what I think AMD is doing. I think right now, AMD investors were getting very excited. So in the short term, they had to show me, hey, look, we deserve this excitement that we're getting. And at the moment, I personally believe, especially with that weak guidance for quarter 1 and the upness of only 3.5 billion, that it was not enough to kind of crave this 45 forward PE ratio that the company was seeing. So it does seem like AMD stock is actually going to follow Intel in after earnings results. But normally, I mean, if you have been investing in AMD, you might know there is this weird trend that AMD tends to do really bad on stock price the day after earnings, and the few days afterwards, the stocks tends to trade back up. That's not always the case, and that's technicality to some extent. For me, that's not something I follow. In the short term, I do believe AMD definitely has some things to prove. In the long term, I do believe I'm still very bullish in this company and still fine with this being my number two position. Now, during their press release, Dr. Lisa Su did mention some great things. She mentioned that demand for their high performance data center product portfolio continues to accelerate, positioning them well to deliver strong annual growth in what is an incredibly exciting time as AI reshapes virtually every part of the computing market. So prior to the earnings call, I do believe investors were somewhat hopeful that maybe this meant that the guidance was going to increase a nice amount. And let me say, from going from $2 billion to 3.5 billion, that is a nice growth. What is that? 75% growth revision, which I think is pretty impressive. But investors, as we kind of mentioned earlier on, were expecting a lot more. Now, if you are reading their quarter one guidance, you might be saying, hey, Jose, this stock looks pretty weak. For the first quarter, they expect their data center segment to be really much flat because their server CPUs is going to be down due to sequential seasonal decline, but the GPU market is expected to be up. And this is something that's normally the trend here in semiconductors. You tend to have some quarters that are better than others in things, even from data center solutions. So we can see that the data center market is going to be mainly driven by GPU at least next quarter. The company also did mention that the client, the embedded, and the gaming segments are expected to decline sequentially. And you might be like, Jose, that is insane. But AMD has given us this information before. The embedded market is in a huge inventory correction that is expected to last at least for the first half of 2024. The gaming market, right, because of where we are here in the gaming cycle, the PS5 and the Xbox have already been out for a few years. Sales there tend to slow down compared to the beginning initial ramp of these consoles. So these two markets were expected to be down on a sequential basis. So not something I'm shocked about. Now, if I may be honest, the one I'm really shocked about is we are seeing that decline in the client market sequentially. Obviously, quarter four tends to be strong due to client sales and the holiday season, but still, I was expected because we are in that U shape over inventory correction phase era over, I would have expected this to be up year over sequentially, but that's not the case, and it's still going to see some weakness. Now, some of you guys may be wondering, hey, Jose, is this bad news for Nvidia stock? And to me, the answer is no. At the end of the day, we've heard from Supermicro, the company just reported earnings, that the AI market is still pretty strong. There's still more demand than supply. And Nvidia at the moment mentions that they continue to improve their supply issues on a quarterly basis. So if an AMD is not taking as much market share as many expected, Nvidia, in my opinion, means that this is very bullish because they're going to retain and grab even more market share, which means they're going to do very well, especially if they have such a strong supply chain issues. So AMD's guidance is not due to weakness in AI opportunities, in my opinion, is a weakness in the supply chain issues, something Nvidia has been working on for numerous quarters to be the top dog here. So I do believe this showcases how strong Nvidia is at bringing partnerships with TSMC and providing strong solutions here in the AI market. So Supermicro, in my opinion, really kind of showcased that, hey, there's nothing to worry about AI demand. Unfortunately, the stock is down roughly 1.7%. Some investors, again, might be correlating this to the weakness of AMD, but I would say there is no correlation here, and it's time to still be bullish on AMD. Now, on Nvidia, being bullish at the stock prices, that's a whole different story. But to each their own in forms of risk to reward ratio. So I hope you guys enjoyed today's episode. Take care, have a good day, and see you next time.